February 19th, 2014, current time 11:37 GMT. Jay Meisler here with the daily Forex trading update from GVI Forex on globalview.com. One note here: when I finish the intraday update, stay tuned because I'm going to do a little bit more of a forward-looking update and what to look forward to on a more macro basis. Looking at the current market today, we have a little bit of a risk-off feel. Sterling's come under some pressure. Well, as it's been soft since it failed above 168 yesterday. You have UK jobs came out. Not really shouldn't be a catalyst, but sterling has failed to regain 167 following the data. 166.50 is so far held, and that is kind of the midpoint of 165 to 168, and why I think that's important. As for the euro dollar, its focuses on 137.50 following yesterday's 137.40 breakout, which had a high today around 137.73. Here's the high. It doesn't show on this chart, but we have a high on January 2nd at 137.75. We got very close to it today. Other people might have different highs because the start of the year you saw some gaps depending when you start calculating your data. But at least from our database, we failed at 137.75. There's chatter of selling between 137.70 to 138, the figure, and that seems to have kept it for now. One thing I will say, when you're within, and people who follow me know, when you're within two big figures and neither one trades, in this case 137 to 138, 137.50 becomes the battle line, and until it's established either way, the market will gravitate around that level as it decides whether to go for the 138 in this case or 137. This happened for the second day. Yesterday we had a breakout above 137.39, or say 137.40. Level it needs to hold now to keep a bid and focus on the upside. Also, there's some support around 137.34 yesterday, so let's make 137.35.40. That fails to hold, we go back to 137, figure to 20. If 40 can hold and then reestablish above 50, then the focus stays on 137.80. Those are your parameters for today. Euro remains cross-focused. You look at the 4-hour chart, similar. That 137.40 level is right here. Same on the 1-hour chart, 137.40. Although we're now below the 100-period moving average, 100-hour moving average, although that is still sloped up. So for today, watch 137.50. That's going to set your tone, and 137.40 is also pivotal on the downside. You have US PPI coming out, housing starts, mortgage stats, and the Fed minutes. Markets, remain sensitive to US data as this severe winter weather here has impacted the economy. How much, we won't know until we see data come out for March and April. Now, here's the macro view, and looking ahead, you have the key event for me is the March ECB meeting, where the market's going to have to factor in at some point the risk of negative, cutting rates, which would make them negative interest rates, or QE, where there's more talk that the ECB could undertake QE. How high that bar is set is only Mr. Draghi knows, but what you'll see now is the window for the euro-dollar move higher is to the end of the month, and once beginning of March takes place, with the ECB meeting that Thursday, the market will have to factor in the risk of some sort of monetary ease, and that'll cap the euro upside. So, as I said, the window for the euro to go higher is probably over the next week and a half, and after that, you have to start to consider what'll, factor in the risk of some sort of ECB easing. As far as the U.S. go, everybody's focused on the weather, on data, how weak it's been over the winter, due to severe winter weather here. Once you see the market stop reacting to weak data, it's starting to look ahead to March and April, which at least statistically should show some improvement in data, and how much will be left up to the economists. The bar for the Fed to stop tapering is pretty high, so you'd have to really see some underlying weakness for the Fed to consider stop tapering. For the moment, it seems to be a toss-up. How much is weather-related? How much is the economy? But in any case, you should start seeing statistically better data once March and April come out. Now, if you look at the bottom of this chart, you will see a link for tradersadvocate.com. This is our advocacy site, and we have a wonderful welcoming package. It's great for, it's got great benefits, it's all free, and it's great content on this site. So I suggest you click on this link in the video. It's clickable, and you can go and sign up and get our free welcoming package. It's really great value since it's free, and it's got some really good stuff in it. So click on this link right here at the bottom.